What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is July 17th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I not only want to spend some time to talk about the two key price levels that I think are kind of make or break moments for Bitcoin, either to the upside or downside, as well as talking about what I truly believe could fuel the beginning of the next Bitcoin rally. But outside of that as well, focusing in on the performance of enterprise blockchain cryptocurrencies as they've continued to lead the market with many of our plays leading in the top 5 or 10 plays. So without further ado, we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alrighty, everyone, so let's go ahead and jump straight into it. Taking a look at the last 24 hours, the vast majority of cryptocurrencies are in the red at the moment, just slightly down below. We're averaging around 2 to 3% to the downside, but nothing too substantial right now, with many DeFi plays as well as enterprise blockchain plays still continuing to kill it. Synthetics up 9%, Aave still up 13%, and then also Ampleforth as well up 33%. So lots of different plays here in the DeFi space still going through pretty nice rallies here. Taking a broad look at the DeFi space, though, it's relatively shaky right now. There are some plays down here in the red, but the vast majority of major movers are still in green territory. The second thing I want to focus on here and really dive into for today, as much as we'll revisit enterprise blockchain in a moment, is focusing on a potential reality that could come in here over the next few months. And I just want to be as realistic as possible with all of you as we go into the rest of the summer and into the fall, and then eventually into the winter where we might expect some bigger moves. The key thing that I want to keep open to here is a reality that we might see a third relatively decent correction in Bitcoin. Now, we've been going through a very long-term wedge here for Bitcoin as the cycles are expanding. We're expecting that, this bull market from the absolute bottom that we've set here is going to last another 11 to 13 months than the previous bull market. We can obviously see this took a long period of time from the bottom to actually reach back up to 20K. So we might have more of that come in the form of consolidation before we really get back up to the all-time highs and kick off the cycle. So again, this is something we have to keep open to. Now, the one thing I wanted to emphasize here is taking, top to bottom here for the last two corrections. We've had an 84% correction that took 52 weeks. We had a 72% correction that took 37 weeks. And now it looks like if we were to go in line with the relative high that we've had recently back in June of 2020 and take the bottom of the line of support here, that roughly speaking, we get about a 40% correction over 24 weeks. Again, as we saw back here, we did have a total correction that was a little bit larger. But if you were to really scale this back to the long-term line of support, it would be cut down to 64%. And it gets to be where you can start to see the declining rate of corrections here, because if you have, for example, around an 80% correction, then a 60% correction, then a 40% correction, you kind of see the picture here. We're getting three waves that are getting more minute as you get towards the tip of the wedge, and then eventually a strong breakout that might even catch up. Even though as we pull back here, we might catch up to our general estimated line of our uptrend in this case. So again, what we see is maybe a potential for an upside breakout above this line of resistance early on here in the later part of the summer, and then a consolidation period might be a serious wave of consolidation of 40-50%, and then a massive breakout similar to what we've seen here over the last few months, continuing on with the breakout on this line. Now, what's to watch here, right? Again, a lot of people are just going to be curious about, okay, what's the price level we want to watch for? So what we want to watch for here is really these two lines here. This line that we have here indicated on our chart, which is a price level around 8,800, and outside of that as well, the descending line here of resistance. Now, if you take a look at this, and just take a look at it in an honest fashion, we'll break it down here to the daily as well, just to get a clear picture. The reality is this: we've still got a decent amount of range here before we go below this, right? And we have it in our mindset. So if we start to get towards this range, we can start setting stops maybe slightly below it. But All in all, the key thing here is that as we go further and further into the future, it becomes easier and easier for Bitcoin to substantially have a close or a breakout above this on the weekly, which is what we're going to be looking for. Not just on the daily. We've obviously seen that here, and eventually, again, if it corrects back down, it's not very substantial. We want to see multiple days where we've broken above this line of resistance. And we haven't seen that yet, but it gets easier and easier as time progresses. So keeping that in mind, that's what you want to watch for here. But all in all, these are the two levels that I'm watching for. Now, speaking again to many people who are Bitcoin proponents, a lot of people have been discussing about what's going to spark this rally, what's going to kick off a rally here that can take us back up to 20K. Of course, there is just the speculative narrative of buying Bitcoin. It's a very small market that could happen. Many people again have been focusing on a very fearful thing, which is the Twitter hack that happened recently, where Bitcoin was the major tool to basically extract wealth. But all in all, right, I'm actually not too fearful about this, guys. They stole about 12 Bitcoin, and this has happened before in the past. What I'm actually overwhelmingly positive about is what's going on in traditional markets and how this is going to have a almost kind of echoing effect on Bitcoin in a positive way and probably provide some upward price momentum. And that is the likelihood that is ever increasing that central banks, especially the Federal Reserve, is going to be entering into negative interest rates. Now, this is not just something that, again, I personally believe. It is a growing bet in financial markets. In equity markets, in some of the broader markets that do betting, such as the CME in this case, on a lot of large economic projections, many people are confident that the Fed is going to be entering into negative interest rates and is likely going to be proposing this policy of negative interest rates all the way through 2023, if you can believe it. So the next 3.5 years, negative interest rates. I mean, this is just crazy stuff here, taking this into account. Now, if you don't want to believe the betting markets in this case, you should look to something that actually is a bit more substantial, and that is the yields on treasuries. Now, we can see here that treasury yields have been declining since back here in April, since many of them have recovered. And in fact, many of them look like they're about to turn back over. If I was looking at this as a stock, I would be looking at these yields on the treasuries, which is what we're looking at. We're looking at the U.S. government 6-month yield in this case, so a government bond that will mature in 6 months. And what's the yield you're getting paid for holding it? We're currently down at 0.0, so not just 13%, 0.13%. Okay, so a fraction of a percentage. And this has dropped from around 2.6% back here in December of 2018. And it looks like it's very much going to probably be going into negative territory, which we did see some of the treasury yields go down to back during the crazy flash crash we had in equities, because the confidence gets strong that there's going to be negative interest rates. And if there's a negative base federal funds rate, it's going to drag down these yields. Plain and simple. No need to be complex about it. You can see here as well, the 2-year yield back down nearly towards its relative lows here outside of the wicks. But again, I think we're going to start to continue to see a decline here. The 10-year yield as well, this looks probably uglier than any other chart out there, because if you get a substantial weekly close below this level at 0.57 or 0.57%, then in this case, it's going to be extremely deadly here, especially for the 10-year. This is what a lot of people are watching. Now, again, this is something that could apply some pressure for Bitcoin. Many people would ask why. Well, because if you're not getting a yield on practically the safest asset in the world, right? You already have European bonds that have teetered into negative interest rate territory, and Japanese bonds, and you also have the U.S. Treasuries in this case that are looking like they're going towards negative yields. Well, in that case, if you're not getting a yield for something that's seen as a hedge, you're going to probably look elsewhere. And this is why gold has been skyrocketing. This is why silver has been picking up momentum. And Bitcoin will do the exact same, in my opinion. So again, we'll see how it plays out. But I think that this is going to be one of the major drivers, because people don't understand how substantial and big treasury and bond markets are in general. It's tens of trillions of dollars, if not hundreds of trillions of dollars, if you're including global markets. It's a massive portion of anyone's retirement portfolio. And it's very, very important to consider that even if just a fraction of that moves into Bitcoin, you're going to see a substantial move to the upside. Now, I want to talk a little bit about altcoins. Altcoins right now on the daily basis are pushing relatively neutral here. Again, this doesn't look like a good daily candle here, but nothing too wary here. We're still holding, the vast majority of the gains, pushing sideways here. Wanted to mention though that there's a lot of plays here that are doing really well in the market. RLC continuing to make another weekly climb here of up to 22.7%, looking like it's ready to set a higher relative high to the wicks here. So going up somewhere probably towards around 20,000 to 25,000 sats. That's the general kind of target range that I have for this cycle here. And the ratios kind of speak to this as well. If we take on our drawings here, we can see that we're breaking out through a short-term wedge here against Chainlink, and this looks like it's got a substantial move to move up towards its previous ratio high here of around 0.3 here against Chainlink. So I'm watching for that. Outside of that as well, UBT, another enterprise play here, still watching for this to possibly build a base on previous resistance and continue moving higher, more vertically over the next few weeks. And then outside of that as well, Band Protocol. So Band is looking really nice here as well. This is basically made from its bottom back here in January of 2020, practically more than a 10x. So this is really incredible to see here. But again, we'll have to see if this can have a nice pullback here, come down maybe towards 23,000 sats, and then move higher. But again, keeping an eye on the Oracle plays, keeping an eye on other types of enterprise plays like UBT. These are the focus points we want to kill it on over the next few weeks. But we'll have to see again. We don't want to focus on the altcoins that aren't performing right now. Until they start performing, this is the interest point, guys. So, all in all, I hope you all are having a fantastic day wherever you are. If you like this video, drop a like. Again, I'd like to hear what you all think about, the potential event in treasury markets of, going negative on yields and the Fed funds rate going negative, because there's also another aspect we didn't talk about, which is savers. Savers are going to start to be penalized to a degree or face even lower interest rates than what they're already facing in their savings account. So again, I'd like to hear what you all think down below in the comments. That all being said though, thank you all so much for watching. And again, if you're interested in any of these altcoins we mentioned, they are available on Digifox. Just want to make that mention again. Always like to kind of hint the point that we've got all the major altcoins that you might want to trade. All right. So anyways, hope you all are doing well, and I'll see you all in the next video. Stay tuned.